A mega fly was just open in this coronavirus vaccine play, and it has a payoff potential of $7.2 million in the next 38 days on a $1.1 million outlay. So what's the stock? My name is Joshua Belanger. I'll show you here in a second, but this is another episode of Follow the Money. Let's take a look here at Pfizer. Pfizer is the stock that we're talking about today. This is where we saw that mega fly. And right now, where they're positioning for this mega fly to have that $7.2 million payoff is right here at $41. Now, closing at $36.90 to $41, that's 11% move on shares in the next 38 days. That's what they're betting for, an 11% move, which means there's positive potential coming out of Pfizer, and look for a new 52-week high to be printed. And let's take a look at that mega fly trade. So right here, we're taking a look at that option chain, and this is where that mega fly was put on. This is the beautiful thing about options. In the option market, there are strategic investors that position, and we can use that to our advantage to see where money's being placed and how they're positioning for certain moves. So this right here, if we take a look here at the November contract, you see a lot of activity here, but this was one position put on to play. So this is where one of those trades went off here. It's 24,000, 24,000, 48,000. So this was a trade put on here. It's a position trade, and they put on what's known as a call butterfly. We'll take a look here exactly how it's positioned. So what this looks like is that they are buying the 38s, selling the 41 as the body, and buying the 44 as the upside against it. So what this would be is a call spread. All this is a call fly, is a call spread against a short call spread. So call spread here, if you just open up the call spread, the 38.41, that would be a call spread normally. But what they did was they sold the call spread so that would create the 41.44 short spread here. That is what creates a butterfly. So they took in about 48 cents here, and as I said, it's a bet with about $1.1 million that has a payoff potential of $7.2 million. Again, what has to happen at expiration for this to have that max payoff of $7 million, which is a big chunk and change, you put $1 million to make $7 million. That's about a 500% return on investment with the next 38 days. This has been in play with coronavirus and also the vaccine. So this is something to consider and to keep a lookout for it. So you look at this one, you put on for a 46-cent debit. You have 46 cents at risk, but then you have the profit potential of the spread here at expiration expires at $41 of about $2.54. So for 46 cents, that's a bet that can have a return of about $2.54 per call butterfly. So this is something to keep an eye on for. And also, just because they're positioning in options doesn't mean that the stock isn't a play as well. You just get more bang for your buck with options. That's why a lot of times we see this positioning in options. But as I said, if this happens, that's 11% move on shares in the next 38 days. Keep your eye on this one. We'll talk to you soon.